Jane Coffey. Jane, good to see you this Friday morning, this difficult Friday morning, and given the rout on the markets globally, where should we be putting our money, Jane? Under the mattress?
It really depends very much on your risk appetite, because at the moment it's very difficult to say with any certainty what is going to happen with the Eurozone. As you spoke about, the yields are going out all over the place. We don't know whether the EFSF can actually support this, or whether they've got enough money now, whether they can start now, whether that will be convincing for the market. So there's huge amounts of uncertainty, and if you're risk averse, then definitely the place to put your money is in a bank account until we get over this. However, these are the opportunities that get thrown up when markets
where are
come
the buying
down.
opportunities
and if you
right now?
are a little bit less risk averse, then right now government bond yields are 2.7% in the UK, trailing dividend yields on equities 3.2, 3.3%. So equities actually are offering you good, attractive income and yield relative to any of your alternative assets. And in that case, if you're looking for equities, then look for the higher yielding equities like the pharmaceuticals, like the utilities, that are offering you 4 or 5% yields. And there's not really going to be much of a change on their earnings forecast, their cash flow streams, their ability to pay dividends, even if the economy goes downhill.
What about the growth? Because that is the key here, because growth in the United States was really the thing that set this ball rolling yesterday. But hang on a minute, what exactly new? We've got growth. It may be a bit feeble, but it's kind of still there. Are we over-egging this?
Well, I really think we are, and for more aggressive investors, I think that we're getting to the same kind of panic levels that we were at this time last year, when people were thinking that the US growth was rolling over and that we were potentially heading for a second double-dip recession. Now, what we've seen is, yes, there's been a bit of a slowdown, but there are quite a few reasons why that should be temporary. One of them was that we had the problem with the Japanese nuclear power station causing disruption to the supply chain, so that interrupted production in quite a lot of industries, particularly the autos industry. We had very high oil prices, which have now unwound. I mean, the oil price is now 23% lower than it was 2 or 3 months ago, and we had pretty bad weather in the US with the tornadoes and things. So all those things shouldn't really be affecting life in the second half of this year. Once you get over, are the politicians going to be able to stabilise the financials?
One of the red flashes that we're putting up on the screen there, you can see it, the European Sovereign Credit Risk Index surges to a new record. Basically, we're at the greatest risk of European debt. Let me get your reaction. That's just come out right now.
Well, that is obviously a concern, and that is what we're watching to see whether these politicians can get their act together. We can get the support operations actually out there and working, because the EFSF hasn't been able to
And how long have they got to get their act together?
Well, the way things are going, a week, a month,
because there was only a fortnight that came out on, in Brussels and saying almost peace in our time. So what on earth has gone wrong?
I think it was never very credible, because they had to get it all sorted through the different governments, and they weren't able to start immediately. I think
that
now,
could take months.
Well, now they're meeting. There's 3 of the heads of state meeting today. They really need to do something decisive and say, okay, this is emergency times. We're going to go ahead and actually start buying.
And that's what you think is actually going to be happening, and the ECB has got to take a much more aggressive stance in those markets.
I think they do. I think they have to show leadership.
But if you're showing leadership, it's all very well buying Irish and Portuguese bonds, but if you start buying Italian ones, Spanish ones, my word, you've got to buy them in shed loads, don't you?
That's true. Yes, you definitely have to do it with commitment.
Okay, we shall see what happens. Jane Coffey, really good to talk to you. Thank you very much indeed.